Hey guys, I'm Rogan, and this is my rant. We believe in the diversity of thought here on this channel. All of those things that YouTubers say all the time to do, I'll save it. Um, and again, as I say, I don't say it in every video, but I have to say it in some videos. When I say diversity of thought, I mean go in the comments and whatever you think is great. Diversity, we need the diversity of thought. We don't need diversity for diversity's sake, like we have to have so many of this race, so many of this religion, so many of this gender, of the million genders. We don't need like that's not the most important thing. The most important thing is, yes, a good pool of people like that, but the thoughts, like the thoughts of, those people are diverse. Not all one person thinks the same. If that happens, then it's the world is a lot interesting of a place, and it's a lot of groupthink, and that's dangerous. They're like sheep and lemmings. Like, see the video of the lemmings on YouTube that just like jump off because all the other ones are jumping off. That's what happens if you don't have diversity of thought. Okay, mini rant of this rant over. So what I'm going to talk about today is my stock investing strategy and why you should not do it. Because again, I'm not a financial expert. This is not meant to be financial advice. Take what I say with a grain of salt. Do your own research and due diligence before you invest in anything. You might make money, but you also may lose money. So don't blindly listen to a random guy on YouTube, which is me. All right. I am going to tell you what I invest in and why I do it and why I like the way I do it. And everyone's strategy is different for them, so you have to figure out what works best for you, what your risk tolerance is. Your age has a lot to do with it. If you're someone in your 20s, you can be a little bit more risky with your investments because there's a lot more time to grow. If you're in your 50s, you need to be a little bit more conservative because you're getting closer to retirement. But my plan with the types of investment moves that I do, on a weekly, monthly, yearly basis, my goal is to retire before I'm 60. So, it's not the best, but it's basically it's doable. So what I'm doing right now is something that is different than what I'm going to be doing in the future. So you got to figure out what works best for you. Age, how much money you're actually bringing in, how much you want to actually allocate to your investments, weekly, monthly, however you want to do it. But basically, what I do is, so a little bit of background. When I started investing was about a little over 2 years ago. I started fooling around on Robinhood, and then I learned about dividend stock investing. And then ETFs is something that you would much rather invest in than dividend stocks, because the dividend stocks, these companies on this side of it, you have to do a lot of more company research. Their financial statements, their balance sheets, their history as a company, like what they do, who they are, how long they've been around. Like what type of dividend do they provide? Are they like a dividend aristocrat? Like what's the level of the dividends? Like have they increased the dividends? Like you don't want to solely make an investment decision just based off dividends. That's not a great idea. But if you want to do the research and pick your own companies, I like the active approach. You could do the passive approach where, I'm just going to throw all my money in like 3 or 4 ETFs and then just overall rise with the market. That when the stock market overall goes up, you make money. I mean, like, be it when the market will, correct or crash, the market always recovers back to where it was. It always has, hopefully it always will. But yeah, so basically what I do is I have 25% in ETFs and 75% in dividend stocks. That's kind of like how I do it, and that's what I like to do. It's more risk heavy than most other recommendations. Like I said, most people will recommend you do the ETF side, but I'm young and I can afford to lose some money. It's more like the reverse strategy is safer. I have a hard on for dividends. You know what I mean? So, everyone's strategy is different and stuff like that. So, I use the dividends and I research the companies for my own stock picks based off of those factors that I told you about just a second ago. So what I do is when the dividends get paid, I just reinvest back into all the other dividend stock companies and the ETFs, so my ETFs grow as well, and that's how I grow my money over time. And I was doing a background of my So I learned about dividend investing on Robinhood, and then eventually I had a lot on Robinhood. I had about 4,000 ish dollars or something on Robinhood, and then all that crazy stuff about the questionable business practices, the lawsuits. Robinhood could go under next year for all we know, and all that type of stuff. So I wanted to move my assets off of that platform and just use it for a little bit of trading money like I do now. And now I use M1 Finance. That is where my portfolio is, and right now my portfolio is a good chunk, and I'll walk you through some of my positions so you can have some good ideas of ETFs and companies that you might be interested in. And again, all of these companies that I've invested in, they're in different sectors. They're not all in energy. They're not all in consumer staples. They're not all in financials or banking. They're not all in healthcare. They're not all in telecommunications or materials, or metal, because there's some metal stocks in here. So they're pretty diversified. So that's another thing that you want to do if you're selecting your companies like this. I'm not telling you to do this, but if you want to do it my way and you want to make more dividends and you like that, if you find that more exciting than just boring ETFs that have that are very passive, if you want to do the boring route, do the boring route. If you want to do the active, interesting, fun, exciting, my brain is everywhere route, and do that. Do whatever you want to do. So that's basically so that I moved my money over to M1 Finance, and I haven't looked back. It's interesting. It's funny. I made yesterday. I made $13 off of Robinhood stock that I had, but I should have held it to today because I would have made $30. But who knows where it's going to go tomorrow? I mean, it's another tech stock that you never know what's going to happen. So right now I own. Let's see. I own about 0.77 shares of SPY. That's a Spider S&P 500 ETF trust. I own about 3 shares of VYM. These are the ticker symbols. That's the Vanguard High Dividend Yield ETF. Then I own some Pfizer, which is the healthcare company. Good stock to invest in. Good dividend there. I'm not telling you everything. And then I invest in Realty Income Corp. Ticker symbol just the letter O. And that's a REIT, so they pay monthly. It's the monthly dividend company. It actually shows that on if you look up their information on the internet. Coca-Cola, 3M. Coca-Cola is KO. 3M is just 3Ms. Enbridge is an energy company that focuses on natural gas, and they're trying to expand into more renewables. Verizon, VZ, AT&T, T. International Paper, IP. AES is another energy company that does the same as Enbridge. And then I have Barrett Gold. So those are some of the positions that I have that you could look at. And some of the, Verizon, AT&T, they're in telecom. Pfizer, they're in healthcare. AG&C and Realty Income are real estate. They're in their REITs. And then International Paper and 3M, they're in materials. Ingredion and Coca-Cola are consumer staples. Ingredion is INGR. And then I have some commodities ETFs, DBB and COMT. And so that's a few of the things that I own. And look at the sectors yourself. Determine what you like to invest in. If you don't really like tech, I don't really invest in tech as a long-term investment like I do here, because tech is very it's volatile, and I don't really like it as a long-term investment in there. And a lot of those tech stocks are very overvalued in my opinion, so I don't really like to invest. So I trade a little bit of them, but I don't really hold them long-term. I mean, I know they're very high right now, but they're not something I see. They're not. I try to be a little conservative. So, all right. So that is my little silly strategy. You can do it if you want. Don't do it. Not financial advice. If you like content like this, I want you to hit that like button. And if you don't like the content, if you didn't like my face or my topic or my shirt, just remember to smash that dislike button. It gives me a chance to improve, make better content, make more content, and then just get better overall with what I'm doing. Subscribe. It's free. And hit that bell notification. It might work, it might not. You never know with the YouTube gods, how they determine if it works or not. Alright guys, have a great rest of the day. I'll see you next time.